Now, I'm going to talk about channel breakouts. And this is a more controversial way to trade, but you'll notice in markets when they trend, they usually remain in a channel. So I'm looking at the exact same chart of Bitcoin, a one-year chart. Remember, Bitcoin versus the dollar, a daily chart on the Bitfinex. And this goes back to March 2017, and we're right here in March 2018. And you'll notice that for most of 2017, Bitcoin remained in this channel. Even though there was volatility between the channel when you could have made short-term trades, whenever prices dropped to the bottom of this channel, they held. Now, something happened in late November of 2017 when the trend actually changed. It accelerated. So you can see this trend breakout that occurred right here when prices went higher. So if you had been watching Bitcoin from the sidelines and said, I'm just going to wait until the trend changes, I'm going to buy a channel breakout, you would have not bought at any of these prices. And thankfully, because in the short term, you could have lost 20 to 30%. Remember, Bitcoin had 7 pullbacks of over 20% in 2017. However, this would have gotten you long here close to the high. So this is one strategy, the channel breakout, I don't necessarily recommend, but it gives me a good indication that when the trend changes, it's as if the behavior of the market has shifted, because people not only wanted to get long Bitcoin, they had a fear of missing out, so they were willing to buy at any price. So when the trend like this in the channel gets violated, you can see that the behavior is starting to shift. Now, another chart is Ethereum versus the US dollar one day on Coinbase, and I want to show some of these channels that exist in Ethereum that differ greatly from the way Bitcoin trades. Now, Ethereum has these kind of step moves on it, whereas Bitcoin had a long-term trend. So this is a different way of trading a market, but you have to kind of follow what the patterns of what the market's giving you. So Ethereum would move to a certain price level. Right here in this little channel, it moved to the 41 to 54 range, and then it would step up in just a short period of time to another higher range. Same thing happened here, a step up, and then it found this range between 160 and 210, and then you had a step to another, and then kind of sideways action for most of the summer. But then the same pattern continued where Ethereum would break out of this longer term sideways channel and break higher. So you can use these channel breakouts in markets that are moving sideways, but I wouldn't suggest using them in markets that are trending higher. I think when you have a trending higher market like you do in this chart of Bitcoin and the channel gets broken, it usually signifies that there's a short-term or medium-term top that's about to occur. So while our previous chart of Ethereum was a log chart, let's look at a linear chart right now. And this is Ethereum versus US dollar daily chart on Coinbase. And you'll see that the moves on the linear chart are much more dramatic than the ones on the log chart. Case in point, if you look at some of these ranges right here, Ethereum stayed between 4 and 500. And it had initially tried to move higher, but that acted as a resistance point at 500. Now, when Ethereum came back and broke 500, this is a signal to get long, because once it breaks out of this channel, there is no resistance until the market decides there's going to be resistance. And when you have an asset that's highly speculative and there's no real way to assign real-world value to it, people just tend to buy because they fear they're going to miss something. And this is really what's been happening with Ethereum over the last year. You just have a lot of people that have the fear of missing out on the next big thing or the next Bitcoin. And you'll see this with a lot of crypto assets that come out of nowhere, and this is responsible for 5,000%, 10,000% gains in a short period of time, because there's only a very limited supply of these crypto assets, but you have the whole world really trying to buy the same assets at the same time. So Ethereum here had a little range after this breakout, and it stayed in that range, and then all the moves in Ethereum happened just in a very short period of time. So each of these breakouts and these moves up happen in just a couple days. Most of the time, the market kind of stays sideways and doesn't really move up or down. And the key is to understand where is the most effective point that you can buy and be involved in the market for the move, and then get out of it when it looks like the move has expired. So you can use these different entry strategies such as channel breakouts and moving averages to find those points. Now let's look at a chart of Litecoin to show you a huge channel breakout. And you'll notice in this Litecoin chart, there was a range that Litecoin traded in for most of the summer between 50 and 100. So 100 here acted as resistance, whereas 50 was support. And for a while, Litecoin was just kind of bouncing around the support level. But then when it got to 100 again, something changed dramatically. There was a huge rise in volume, and this breakout signaled to market participants that Litecoin was ready to go. And it just happened at the same time the rest of the crypto space was rallying. So Litecoin went from 100 to 400. This is a 4x return in just a couple of days. And this is not something that is ordinary. This is an extraordinary event that you'll probably only see once every couple of decades. But one thing I want to point out with this chart is that even though Litecoin peaked in early December at about 400 and then went into a downward swing, the point that was resistance earlier, remember this $100 level, then became strong support because people who had missed that buying area were now sitting here waiting for Litecoin to pull back. So if you had missed this original buy, you could have potentially waited until it came back to 100. Or let's say you bought Litecoin on the breakout and sold it somewhere in here. You just really had to wait till it came back to a strong support level at 100 before buying again. Now in the last chart of Litecoin, we looked at how it moved on a linear scale. But I'd like to show you how Litecoin versus the US dollar moved on a daily scale to illustrate that if you had been trading Litecoin for the entire year, a parabolic move like that wasn't necessarily out of the ordinary. So if you look at this on a log scale, you'll notice that the move in early December in Litecoin that took it from $100 to $400 a coin wasn't that out of the ordinary, because in May you had moves that took it from 10 to 40. And earlier in the year, you had moves that took it from $1 to 4. So you had multiple 4x moves that occurred in just a short period of time in Litecoin. And so when you're thinking about an entry strategy in crypto assets, you should also look at the log scale to see if a move like that has occurred in the past. So that concludes our section on entry strategies. Now at the end of this section, you should be able to select entry points based on technical analysis and identify key support levels using Fibonacci retracements.